Good Friday morning. TGIF is in the house. We are rocking a good old party this morning. My wife is off, so I'm going to do just a few short videos. And it is so good to see you guys. I really appreciate all the love you've been giving me. Again, like, subscribe, share, hit the bell for me so you get notified and spread me around. I do want to introduce you to Mr. Russell Brand. I know you guys know him anyway, but I thought he had a really good take on what's going down with the banks right now. And the biggest thing anybody can do, in my opinion, is to not freak out because that'll cause a bank run. But I still got my own research to do on that. But it seems like five or six of them, even across the pond right now, over at I think Swibank or Swiss Bank. Hoo, hoo, hoo. That's a big bank too. So just be calm, cool, and collected. But let's check out Russell Brand, see what he has to say. I'm sure if you don't follow him now. And he is amazing when it comes to, he used to be, he's still liberal, but I think he's starting to see some of the clouds clearing away and a lot of the truth. So let's get to him and hear what he has to say about what this last week of craziness has been with our banks.
Example, if there was a massive bank crash in 2008 that was caused by impropriety, deregulation, prioritising financial interests above the interests of ordinary people, that literally had some of the same protagonists involved, I'm not suggesting they're major players, but certainly people that worked at Lehman Brothers and Deutsche Bank now work at Silicon Valley Bank.
That happens everywhere, just so you know, whether it's politics, whether it's the high school, whether it's banking. Uh, a lot of people from the in crowd go to the next in crowd for support. I don't know if I like it, but it's part of life.
I mean, that's enough of a connection. Deregulation somewhat led to this situation.
And by the way, he is talking about 2007, 2008. It really started going wonky on Wall Street. That's exactly when Barack Obama was coming in. So I don't know if you guys remember that, but it was nuts. A lot of bubbles burst.
And it's even possible that people will continue to profit in spite of the fact that on the surface, loads of money has gone missing or disappeared. Let's get into this story in detail.
Is that not what happens all the time, whether it's military industrial complex, our own balancing our own budget for the United States, and now he's talking about the bailout? All of a sudden, money, I don't know. I don't know where it went. Anyway.
Detail and see what it can teach us about the way that Washington and Wall Street interact, the symbiosis and revolving door between those two institutions, and how ultimately, even if Joe Biden literally goes on the TV and says taxpayers won't pay for it, if you change the word taxpayer to the word you, that might not be true. Here's a mainstream media news take, MSNBC.
Cheers, mate.
You know how those guys love me. Hopefully, they won't make this a partisan issue. They'll accept that there are a lot of institutional problems that need to be resolved that neither party are addressing. They won't simply say, this is the fault of one of the parties, the one we don't like.
5 years ago, when Republicans were last in control of the House of Representatives, they used the opportunity to roll back banking regulations put into place after the 2008 financial crisis.
Do you see that what they're essentially saying is, this is Trump's fault? Here's Trump surrounded by people. Now, of course, Trump's actions do contribute to this current crisis. But is that the entire story? No, because already what he's not told you is that in 2008, Barack Obama bailed out the banks after that financial crisis, meaning that the people that literally caused that problem were given the opportunity to participate in the resolution of that problem, as well as being exculpated from the blame that they ought rightly have shared in. No one went to prison, no one was penalised properly, whereas across America and across the world, ordinary people lost their homes, lost their jobs.
By the way, this is the start of why I voted for Obama. And I actually got a little weepy in my eyes when I saw him win. And of course, I was taken aback by how well of an orator he was. He could really speak well. He really made you feel like he was talking to you. And then by 2010, I was like, uh-oh, I don't know what I did here, but I got to figure some new strategies out. Are you guys with me? If so, leave a comment below how you got through 2008, 2009, and did you shift a little bit from maybe leaning left to maybe leaning right? That's what happened to me.
Measurable, meaningful consequences. Were there measurable, meaningful consequences for the people that caused it? Let me know in the chat. Let me know in the comments. Just in case you don't know everything about the complex and deliberately obtuse world of global finance, here are some facts. On Friday, California regulators shut down the Silicon Valley Bank, SVB, a top lender to venture capital firms and tech startups. And the Federal Deposit Insurance Corporation took it over, following a bank run by its customers. I think that means a load of people took out their money at once. On Sunday, regulators closed New York-based Signature Bank. During the pandemic, startups and technology companies enjoyed heady profits, some of which they deposited in the Silicon Valley Bank. Flush with their cash, the bank did what banks do. It kept a fraction on hand and invested the rest, putting a large share into long-dated treasury bonds that promised good returns when interest rates were low.
And not only that, that's called fractal banking. So if I go deposit $1,000, they're only going to see 100 of mine go in, and they're going to take 900 and put it in 7, 8, 9 places to start up making more money. Hopefully they're hoping that their decisions are rock solid and that I'm not going to come in and say, hey, can I have my $1,000 back? And then they go, we don't have it right now. Could you come back around next year?
So far, so good. As long as them interest rates remain low, nothing to worry about. We'll be rich. Rich, I tells you. But then, starting a little more than a year ago, the Fed raised interest rates from near zero to over 4.5%. Oh no! As a result, two things happened. The value of the Silicon Valley Bank's holdings of treasury...
Just so you know about the interest rates rising, if you're an everyday person and you're going to work, taking care of your kids, cooking dinner, making sure you're managing your job right, whatever. If you're not paying attention when some of the business channels are saying, oh, Fed raised it. It went from 0.5 to 1.0 now. Oh, it went from 2.5 to 3.2 now. If you weren't paying attention to that, you didn't know something was coming. And a lot of the news, I'm not going to say like MSNBC has the regular news, and then they also have their business channel. Fox does the same, Fox Business. So unless you're really kind of hawking on that, they might blurb that for like 30 seconds. So this whole climb from, a real low to a much, much significantly higher interest rate, that was the sign of things to come. And there were plenty of people that were saying it. But if you weren't paying attention, you're now going, oh my God, what's happening with the banks? And you're not at fault for that. You're supposed to trust people. And when you put your money in, everything's good. And when you want to go get, your dinner and go out or go for a vacation, you're good. But now people are going, uh-oh.
Treasury bonds plummeted because newer bonds paid more interest. And as interest rates rose, the gusher of venture capital funding to startup and tech companies slowed because venture funds had to pay more to borrow money. As a result, these startup and tech companies had to withdraw more of their money from the bank to meet their payroll and other expenses. But the bank didn't have enough money on hand. Yesterday, we also spoke to Ryan Grimm, who talked about a text message chain where people that were invested in SVB, or at least had their money in SVB, communicated about drawing that money out prior to drawing it out.
Listen.
He believes that should be investigated, that's significant information. Why didn't they just draw out their money individually? Why did they do it collectively? Obviously, any responsible reporting on this issue has to include the most recent and significant financial crash, the events of 2008, the political and financial ramifications of which are still being felt right now. Many people argue that Donald Trump is a consequence of Obama's significant decision to bail out the banks in 2008. The way in our country Tony Blair will ever be tethered to his decision to invade Iraq along with George W. Bush, your then president. The fact that Obama didn't say, no, I was voted in on a mandate of change and hope and supporting and standing.
And he was. That's what really rocked me. I felt like the minute he got in there, the next 2 years, I just saw a lot of things I wasn't prepared for, and it changed my mind significantly.
Standing up for ordinary people from across the political and social spectrum. No way, man, I'm not doing it. Instead, what did he do? He did what you would imagine he'd do. He bailed out the donors and the banks. Then they let people set up new regulations and new rules that were involved in the crisis. The whole thing's exactly what you think. And one of the things that worries me when I learn about politics, and you let me know if you feel the same way, is the things that you often intuit, like, hold on a minute, do they just bail out their donors and stuff? You're right. Obama endorsed the Wall Street bailout and appointed a team of Clinton Clinton-era economic advisors, led by Tim Geithner, who became Obama's Treasury Secretary, and Lawrence Summers, who became Director of the National Economic Council. These were the same people who in the 90s had prepared the way for the financial crisis by deregulating Wall Street. So in the 90s...
So do a little homework here. Check out some of the funding that Hillary Clinton received for talking to Wall Street and doing some get in front of the mic situations and give a little speech. She made some duckies.
Under Clinton, they deregulated Wall Street. They were lobbied, presumably, and they went, oh yeah, all right, we'll let you trade in ways and bundle stuff together and make irresponsible bets and communicate in weird ways. Then the people that made those decisions were present in the Obama administration, so they're not going to go, oh no, you know those ideas that we had then, they were bad ideas. Why don't we put the people responsible for that in prison? Oh no, it's me.
That's why a lot of Americans, and I'll tell you what, if you're on the other side, and you're kind of knowing that this is happening, and you're like, oh, God, you're either going to be like cognitive dissonance, and you're just going to be like, no, 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 and you're going to find everything you can cherry pick on the other side, or you're actually going, my team's failing. And both sides, I am really upset with government. Both sides always point the finger with three of them pointing back at them.
The Obama administration rescued Wall Street, but at enormous cost to taxpayers and the economy. Estimates of the true cost of the bailout vary from $500 billion to several trillion.
Are you kidding?
I can't conceptualize either of those numbers, can you? They're just abstract at that phase, but I'll tell you what's not abstract, not having an house. The Federal Reserve also provided huge subsidies to the big banks in the form of virtually free loans. But homeowners whose homes were suddenly worth less than the mortgages they owed on them were left hanging in the wind. Many lost their homes. Obama thereby shifted the cost of the bankers' speculative binge onto ordinary Americans, deepening mistrust of a political system increasingly seen as rigged in favour of the rich and powerful. Now, in a minute, we'll watch Joe Biden's speech, and he says things like, you know, capitalism's about risk. If you risk money and you lose money, that's on you. But it ain't on you. And he was obviously vice president when that happened. So what kind of credibility has he got when it comes to talking about financial crisis? None. What we see more and more in these investigations that we undertake here at Stay Free Media is that the system is rigged in order to support institutional, financial and military industrial complex power, and the skill of the political class and media class is managing that information, so it seems like it's either the right thing to do or there's no option but to do it, or the other people would have done it worse and indeed have done it worse.
Which leads to no transparency. At the bottom line, there's no transparency, so they can, you know, duck and parry as much as they want, and even if we complain about it, nobody does anything about it. And all the handshake deals up there on the Capitol Hill don't help anything else. And I get a lot of pushback that there's a uniparty, but trust me, there is. There are people on both sides back there only looking out for themselves.
Worse in the past. So we just feel trapped in a situation where there's just no options. But the fact is, there are options. Yes. Democracy is an option. Independent journalism is an option. Independent thought is an option. Your freedom is an option. But to understand this story a little more deeply and with a little more clarity, we have to look at events in 2015 as well. 8 years before the second largest bank failure in American history occurred, SVB's president personally pressed Congress to reduce scrutiny of his financial institution. So 8 years ago, the president of SVB, Greg Becker, personally himself lobbied for deregulation. Do you know what would make things a lot easier? Go on. Deregulation. What do you mean? Let you do more stuff that you want to do without stopping you from doing it in case it causes a financial crash of some kind? Yeah, that's right. Deregulate us. Let us do what we want to do. I see banking as being like jazz. I like my banking to be free flow. Okay, we'll deregulate you, but there won't be some sort of crisis, will there? I'm promising you, I give you my word, as a banker, there won't be. Is it me? Or does the future feel more insecure and uncertain? Wars, pandemics, lies, trickery. My cats keep having kittens. Trade firm in the US with an A+ rating from the BBB and thousands of satisfied clients. Right now, 315, or simply text BRAND to 9988.
You can go back and look
Get
at that.
up to $5,000 of silver and protect your future in this crazy, crazy world with some solid precious metals literally made
I'll let it
stars. Run. In 2015, SVB President Greg Becker submitted a statement to a Senate panel pushing legislators to exempt more banks, including his own, obviously, other banks, not mine. I'll do it the hard way, but these other guys, give them a shot. From new regulations passed in the wake of the 2008 financial crisis. So there was a massive crisis. Regulations were introduced. We cannot let that
You won't hear this in news. 2008, 2015. This all went haywire, 2 different times. And then because Trump comes in at 2000, not that I know he did maybe in many people's eyes some wonky things financially. I'm pretty much okay with all he did. But yes, nothing of 2015 or 2008 is ever talked about because His Grace Obama was there, and he had Hillary involved with some stuff when she was Secretary of State, all that stuff. This is where they're pointing at Trump and not talking about the 8 years before him, or 12 years. Yeah, 8. Yeah, 8. Sorry about that.
That happened again. We've got to stop it. Let's just wait a little bit of time. All right, bit of time's passed now. Can you take those regulations off? It's making it impossible for me to make money in unethical and currently illegal ways. 2 months later, SVB added former Obama Treasury Department official Mary Miller to its board. So they do a bit of lobbying. They appoint a former Obama administration member, and what do you know? They suddenly get their way. But don't think there's a revolving door between Washington and Wall Street. Don't think that no matter who you vote for, you're going to get the same sort of results. Don't think that there's no one in Washington standing up for your rights. In even the peripheral figures that do care about your rights, voices in the wilderness that won't have any meaningful impact because institutional power is locked into a set of interests that can't be moved by democracy. They've rigged the game. You know that already.
So anyway, you can see right. I'll let that play real quick.
Around that time, federal disclosure records show the bank was lobbying lawmakers on financial regulatory reform and the Systemic Risk Designation Improvement Act of 2015, a bill that was the precursor to legislation ultimately signed by President Donald Trump. The bill was supported in the Senate by 50 Republicans and 17 Democrats, including Virginia Senator Mark Warner, Democrat, for whom Becker held a fundraiser at his Menlo Park, California home in 2016. It's exactly what you think it is, isn't it? They hold fundraisers. If I hold a fundraiser for you, will you deregulate the banking industry so I can make money? The end.
All right, well, there we have it. I hope that gives you a little bit of information of what's been going on up there. Please, whatever you do, like, subscribe, share. I will put the link in the bottom there so you can watch the whole video through. And whatever you do, keep doing your research. Try not to fight with each other. Let's just go after Congress and Capitol Hill because they want us to fight. They really do. And we need to fight for veterans. So you can find Gretchen over at Gretchen Smith over at on Twitter at Code of Vets, or you can follow her on go right to her website, codeofvets.com. Sorry about that. Too much coffee. But other than that, I got nothing much else. I'll see you on the next video, and love to you guys. Peace out.